oh my goodness, this might be the most important week of the summer and possibly of the year, right? We get a Fed rate decision, we get Q2 GDP, we get big earnings announcements. Are we going from a growing economy to a shrinking economy? Man, there's a lot of stuff coming out. We got consumer confidence, consumer sentiment, new home sales, pending home sales, lots of stuff this week. What has got your attention?
Yeah, so all of it.
Everything.
The biggest one obviously is the Fed. That's the big mover, but earnings before that. And we have the big guys coming out today, all the, FAM or FANG or whatever they're called now.
Mm-hmm.
With Google, Microsoft, Facebook, Apple, they're reporting today. So,
they report this week, actually. It's 2 of them tomorrow, 2 the next day, 2 the next day. Nobody reported.
Oh, okay.
Nobody
FANG, today?
Nobody did. Well, there are reports, but it's not the FANG names. Those start tomorrow.
Oh, I see. Okay. So, so anyways, you have the big guys, reporting this week. You got the Fed doing their thing. They're going to be looking at inflation. They're not looking at what,
let me ask you about the Fed, because of all the stuff coming out, I think the one thing that I don't know, actually, I don't know if we agree. I think they're going to do 75, and I think that's like 99% certain. But what I want to ask you about is that Powell interview. Is he going to come out dovish or hawkish? Because he has a month and a half until their next meeting, right? The next meeting's not September. He has to set a tone. And this is where I think the market's wrong. I think he's going to come out a big old nasty hawk with talons, because he doesn't want to show any weakness right now. That's my opinion. What do you think? So A, 75, yes or no? And then B, what do you think about his interview after the announcement?
Yeah, definitely 75, unless they telegraph something today based on something, or tomorrow. They do not like to surprise the markets. So if they go into the meeting without any change, they're gonna hike 75. And they haven't said that they would hike 75 the last meeting. What he did say was that it would be appropriate. A lot of the board members said it would be appropriate. They definitely, with the inflation last print that we had, and what's going on right now, and PPI that came out.
11.2.
Right. Job market still strong, still more jobs than there are people willing to take them. Recession, the economy, according to the data, hasn't slowed much. And of course, now Yellen is saying we're not in a recession. The White House is saying we're not in a recession.
Yeah.
By technical definitions, and they've redefined.
We called that.
Is.
We called that a couple of weeks ago. They're not going to let it be one.
Just like there was no inflation.
Yeah.
There's so
what? It's crazy.
That's kind of where we're at. So, anyways, I think he comes out, like he did last time, hawkishly dovish. So he's going to come out and say, nimble, humble. We're going to monitor the data.
Yeah.
This is where we're at. If we need to take any kind of action, we will. But until then, they're off. Till September, and they have plenty of time for plenty of data to come out to guide that.
Yeah.
But I think they're going to say what he's been saying. We're seeing inflation plateau. We're seeing signs that the economy is strong enough for continued intervention.
Do you think he'll be brave enough to call 9.1 peak inflation, or do you think he's smart enough not to get caught in that?
I think he's going to use the word plateau. I don't think you're going to hear him say peak, because there's two very big differences. A peak, a lot of times you think's just boom, you peak and then you come back down. I think he'll use the term plateau, meaning inflation ain't going anywhere anytime soon. And a lot of people in this world of instant everything want everything now. They want markets now. They want everything, housing correction now. It takes time. Housing is going to take a while, to fix. It's going to take a year or more to correct.
Years, probably.
Years, possibly. But with rates, it's all based on rates. If they shoot up, they get in the 7s, like we talked about, it could happen quicker.
Maybe,
but look at where we've come. It's correcting, and it's working. But inflation is very sticky.
Yeah,
and with the type of inflation that we're experiencing, like a lot of people are hanging their hat on gas prices. Well, gas prices came down 50 cents. They're still over $4 in a lot of areas, over 5 in yours.
Dude, they're in the 6s.
Right.
689 yesterday.
Yeah, it's still double what it should be. I mean, we're down into the 4 range, $3.60 to $4, depending on the day and where you go. That's still almost double what it should be, and what it usually is, around $2. That's huge for a lot of people still. Everything else, nothing else has come down. That's the only thing. Nothing else.
The other thing is rent is just, I've been complaining about the rent component for a year. The bad news for the Fed is that number is starting to show up. Right?
That's the thing. So that's coming into the equation. So, that takes time, and it's not coming down. Rent's going up, and everybody out there in the world of, real estate, they're all, paying what they're paying, and we're going to raise rents. And So that's going to continue for a while. We know that food and all that, we're going into the fall, energy is going to be a problem. As long as you've got the war in Ukraine, you've got food, you've got energy, all those things are still a problem. The only thing that's come down a little bit is gas, and that's going back up. That's temporary. That's not going to last forever. So potentially. So, what I'm saying is plateau means it could take, by forecasts, 18 months to 24 months to get inflation back down into the fours.
Wow.
So the Fed has a lot more work to do before they can, pivot like everybody wants them to do, or stop doing what they're doing. So I think he's going to come out and say that we have, we've still got work to do. We're looking at a plateau, hopefully, I think, depending on how he puts that. But we're prepared to do what we need to do. The economy's strong enough for future hikes. So I think, same old stuff he's been saying.
Yeah, and then we go back to the bond market. Man, the bond market rolled out of bed on Friday. It's up a little bit today. But the bond market is calling his bluff. The bond market is 40 times bigger than the equity market. It's often called the smart money. The bond market is saying a recession is now more important than inflation. That's what I think it's saying.
Well, it's just concern. So it's a flight to safety. So, if you have allocations, you have big capital, you have to allocate, where are you going to put it? So it's risk on, risk off. So in a recessionary environment, you take risk off the table.
Okay.
Because that affects companies' output, their earnings, things like that. So what we've priced in so far, we haven't priced in earnings. Earnings is not priced in the market yet in terms of decline, right? So the only thing that's been priced in so far is, in terms of monetary, policy, liquidity, things like that. So we're still on the second leg of that, where, everything has to reprice. The S&P needs to reprice, all of that. Earnings compression has not happened yet in the stock market. So, we might have seen a little bit of valuation compression, but, not.
We've gone from 22 to 16, but the E part of that is still robust.
Yeah. So they've got some work to do. And, the bond market's looking at all that. So we have the yield curve inversion, which is always the history, predicted recession, meaning short-term yields are higher than long-term yields, meaning investors want to protect for the next couple of years. So when you see two-year treasuries go up above the 10-year, that means investors are putting money, in a safe place for the next couple of years, because they're worried about, what's going to happen to, risk assets. So that's a sign for two things. One, there's a lot of people, pricing in a recession, and also a decline in the markets, in stock markets, risk assets. So that's telling you got another leg down in risk assets. And
so that's actually very interesting. So do you think that's just the big allocator saying they foresee a recession and they see earnings coming down, so they're going to hide out in bonds, let the equity market reset and come back and buy later?
Exactly.
I get it now. That makes sense to me.
Yeah, capital rotation. So, it's just a flight to safety, just like the dollar. So that's what they're going to do. And, until the dust settles and we see where we're at.
Yeah. So one of the side effects of all this with the 10-year falling is, if you are in the market to get mortgage rates, you might want to call your mortgage broker and see if rates got a little better. Because
that's like we talked about in the last video, that's the problem. Now
the rates are better.
Backing up a little bit. So, but it's summer, not a lot of people shopping. We'll just have to see how it goes. And, that's a big problem the Fed has on its hands that it has not really affected yet, is housing. And they want housing to correct. They want rents to correct. They haven't been able to really affect that yet.
Not yet. No, it's very.
So it'll be interesting to see what he says about housing and how much.
Yeah, because
it'll also be interesting to see what they say about recession. I don't think you're going to hear that word come out of his mouth.
No, only if there's a question asked about it. I think it won't be in his statement. I don't think. Let's talk about earnings. There's a lot. There's 150, almost, what is that? 150 out of 500, 30%, or no, it's 175, excuse me. 175 of the S&P 500 reports this week, the big tech names, the FANG names. Then we have MasterCard and Visa, and we got Harley Davidson's and Whirlpool, and Weber just pre-announced today. There's a lot of stuff that's going to highlight what's going on with the consumer. Any of those earnings have your attention?
All of them, but the problem, it's just a game. So they knew last time what was coming. So they're just shooting low so they can overperform. So, if they haven't outperformed lower expectations they set last time, then that tells you there's some stuff going on. Yeah. And then you always look for that future guidance and see how low they shoot there. But it's really silly. They just set the bar low because they know they're going to beat it. So, it's really a game to just kind of keep playing. The difference is, The Fed is out of the game now. Liquidity is off the table.
Mhm.
Investors are in safety. Risk is off. So it doesn't matter what they say. If they beat, you get a nice little bounce. If they don't, you get a drop like you saw with Snap. The real question is things are changing. So the technology sector is changing, emerging, technologies, the stay-at-home trade, all of the ARC, plays, innovation is changing, so the not only the capital and the talent, but the revolutions in those technologies are changing. So, that's what's going to be interesting to watch. We're seeing, let's just look at Netflix, right? They were the king. I mean, they killed Blockbuster. They were seen as the industry leader. They got caught behind the 8 ball, and now they're playing catch up. So you're going to see that with all these other innovations. And, this whole idea, a bet against, ARC or a bet against technology is a bet against innovation. That's just silly. Yeah. Because the true definition of innovation is you're always getting better. Yeah. So whatever this innovation was here is eventually going to be, replaced, right? Retired, and Tesla's another one. They were the one and only, they were the leader. Now you got everybody else coming in the game, taking market share. So it's really interesting. And that's kind of what I like to look at is, from innovation, who's the game changer there and where's that going?
Yeah, I love that. Again, your ability as a business owner, a builder, you acquired companies and is the way you break it down for us so simply is just awesome. We appreciate you so much on this channel. Where can people find you?
Yep, gregdickerson.com. That's where my YouTube channel links are and everything. Go check it out.
Yep. Thank you, buddy.